Morning, everyone. I need to just position this. It's a corporate presentation, but just who are we? What is Euronext? And so, very very rapidly, Euronext is a stock exchange, or more precisely, it's a group of stock exchanges throughout Europe. We are Paris, Amsterdam, Brussels, Lisbon. We very happily welcomed Ireland into the family a few months ago, and as many of you might know, we are targeting Oslo. So we are now moving away from our little family. What does a stock exchange do? Very simply, it raises capital. That's the point. We bring companies to market and we raise capital. Most people know that for shares and stocks, the CAC 40, the AEX, etc. What people understand a little bit less is that we have derivative contracts or futures contracts. And these terms, derivatives and futures, are very important because what it is, we're talking about taking a position, buying or selling something in the future, first of all. Secondly, it's also something that derives its value from something else, the underlying. And so very rapidly you can do that on stocks. You can anticipate where the CAC 40 will be in 2 years' time, 3 years' time. That's all very well. Closer to home and closer to our hearts here, agriculture. And we can have commodity futures contracts. So what are they? They are contracts whereby you can have a visibility over several years. We actually talk in crop years because, of course, we're agriculture. So out to 3 or 4 crop years, you can see where the market sees the trend in wheat, rapeseed, corn, etc., etc. A very simple example, how does it work? Well, I'll be very simple because I know we've got a very good example of hedging coming up, but I'm a farmer. I know what my yield is. I produce wheat, and I see on the Euronext screens that next year or in 2 crops, someone is willing to sell at a price which is very convenient for me, and it's all about margins. So it satisfies my margin requirements, so I will sell it in advance, 10, 15, 20, 30% of my future crop. And once that is done, once I get confirmation from my market member, Rabobank, Leleu, whoever you use in Belgium, or Société Générale, once that's confirmed, it's stuck in stone. It's locked in, and that protects my margin. And that's where we introduce the notion of risk management in futures markets. And that is the core of what we do. We allow people from the commercial, physical world, 80%, 80 of our users are people from the physical world. So they go from the farmer, to the cooperative, to the physical trader, to the buyer, to the miller, to the Nestlés and Danones of this world. All of these people are our core markets, and they're looking to lock in a price, either as a seller or as a buyer, to protect their margins. That's the simplified thing of what we do. As we move forward, so that's just for the corporate stuff as well. I won't dwell on this, it's just the history of the corporate. This is what I want to show you. We've been around for 25 years, and there's a reason for that, is that from a legal, well, it wasn't possible in Europe to have derivative markets before this period. Don't ask me why, it's history. Our competition is Chicago, and it's been around since the 1850s. So we've got a little bit of catch up to do. The big difference is that if you take wheat, for example, in Europe, EU 28, we produce roughly, very roughly, 150 million tons of wheat a year. The US produces 60. So we're huge times bigger than they are. Which means that the upside, a very recent franchise, we are playing catch up, a bigger underlying physical market. The ingredients are there for success. That's what we're looking at. And I'll just leave you with one figure. So last year on our exchange, we traded. So one important factor, sorry, I forgot to mention, these contracts are physically delivered. If you buy a contract and you hold it to the very end, you will be delivered the wheat or the corn or the rapeseed. It doesn't go that way. That's not the point of the contract. The point of the contract is to lock in that price. It certainly does not replace your physical bilateral deal that you will be doing, and you always do. It just protects that period between the moment that you buy the contract and that you sell it. You're protected with this futures contract. So then you'll go ahead and do your selling your raw materials or buying them in a classic fashion. Now, if you look at what's traded on our wheat contract, our flagship contract in 2018, sorry, the equivalent in tons, physical material, we traded 3.5 times the European production on our platform. It's good, bad, I don't know, it's a figure, right? Compare that to the US. Does anybody guess what, if you do the same example in Chicago, taking what traded on their platforms versus the real produced wheat in the US, do you have any idea what the ratio is? It's over 90, 90. And that is a figure. Now, we don't want to be anywhere near that. Let's be very clear. The success of Matif is the fact that we are 80% commercial. However, there's a huge step where we can actually grow the business internationally and also by user type. We need financials. Let's not, that's not a rude word. Financials, we need investors to be in there as well to ensure that liquidity. But the balance that we want to keep is commercial. And finally, why are we here? Well, we've been working for the last 14 months with Jules, Robin, and Agnès and the team. We need to get more exposure. We need to promote more the fact that these tools exist. They are part of a toolbox, along with insurance and many other products, but we're just not known enough. And we really want to be pushing forward within the CAP 20 reforms and just make sure that people are aware, and we're here to help in any way we can, mostly through education. That's our role. And then we have intermediaries, professionals who will trade on your behalf.